Hello everybody and welcome to this video about the weak references. So what I would like to show you on that video is how we define the weak reference. By the way, this is something that I learned from Jim Dalton. This is Jim Dalton's work that has been included in this um, Pro Suite Gold and the Market Profiler products to the market profile chart. So the weak reference are references that are being followed by short-term traders uh, in their day-to-day trading. As you know, there are many kind of traders that trade markets, and you have the long-term trader, the mid-term trader. You have the short-term trader, the very short-term trader, the overnight trader, and the day trader. The day trader are those traders that trade only the current trading pit session. They do not keep position overnight. So I would like, it's very important for us to differentiate between short-term traders and the rest of the trader because they do not behave the same way. And in my experience, um, most of the trading markets are being usually um, controlled by the short-term traders most of the time, because the long-term traders, they have a longer term view of the market. They have a lot more capital, so they are just not trading all their size all at the same time. They do it in at different levels on the chart. They do not trade the same way as the short-term trader, which are less well capitalized. They have tighter stops, and they are what we are very often calling the scare money. They are very emotional, and very often you're going to see a movement in the market that are due to inventory correction, which most of the time is related to short-term inventory. So it's important to differentiate between these traders because we will adapt our trading strategy according to who's in control of the market. And the weak trader, the short-term trader, like the day trader and the very very short-term trader that may keep position overnight, but no more than for 1 or 2 days or 3 days at the most. Uh, these guys are considered a short-term trader, and when they trade, they pay special attention to a specific market reference. And these reference are the open for the day, for example, the halfback and stuff like that. If you go to the, I'm going to right click on my mouse and go to the indicator window for the market profile, the Pro Suite Gold here. If you just scroll right at the bottom, and this is the same thing for the market profiler product, you're going to see here at the end that we have a setting for the weak references, and by default only the VWAP is not included in the weak references. So these references are being closely monitored by short-term traders. Long-term traders, they do not have a clue about these levels. They are not interested. They trade much too big size, to look at the specific level. to buy a specific point in the chart. They do not trade like that. This is how the short-term trader trade, though. They're monitoring these reference here to to buy the market or sell the market, place their stops, and that's the way that they trade. So, what's part of the weak reference? Um, Here, by default, are the single prints, the overnight, the settlement from yesterday, the open of the current day, the halfback of the current day, as well as the halfback for the previous day, the extremes, previous day high, previous day low, the POC of today as well as yesterday, and the POC for the overnight, the gap lines, stuff like that. So you can here uncheck some of these references if you feel that they do not represent really short-term trading, but here by default, these are all the weak reference that we are monitoring. So the way that it works, and it helps us a lot monitoring these weak references, that if the market, let's say that, for example, here the market trade below the current day open, and all of a sudden we trade up to the open and start trading down again, we know that what kind of trader did that sell here at the open level. It was being done by short-term trader because they are looking at these reference to enter trades and to place their stop. Uh, it, it there's no chance it's going to be a long-term trader that's going to be aggressive at these levels, especially, they do not look at these levels. So that's the way that we define weak references in our products. And as soon as they happen, it's being monitored by the software real time. And as soon as it happens, they're going to be printing the weak sell or the weak buy directly on the chart here. And it has to be collected real time. So as long as you have um, your connection is on, and you only close the software after the end of the day of the trading session, they are going to be kept historically as well. So you will be able to reference these levels from a previous day. They are going to be shown here only, obviously, when we are in a split mode uh, for good reason, obviously. So the so
Market is now closed. I am saving today's weak references.
okay, that's nice here. You just heard what I'm saying. The market just closed. This is the crude oil market. The market just closed right now, and I think it is about a minute or two after the close. You're gonna hear a voice here telling you that uh, now the software is saving these references today for to be kept for historical review. So if you also have access to these uh, weak sells and weak buy uh, through a report, if you click on the reports button on the toolbar at the top, you have three kind of reports, and one of them is concerning the weak references. So if you click on that, you're going to have uh, like I said, historically, all the historical weak reference that the software have been saving, as well as the current profile. So it's very nice. It's a very nice information to have. And let's look at the today's market, for example, and how they are shown here on the week reference report. So what you have is the date that it happened, as well as the ending time of the bar. These are 30-minute bar, obviously. So 9:30 is the A period bar this morning. So this is the first week sell that we see here. So you have the date, the hour, what kind of week reference, reference it is, a week sell or week buy. You have the level that it happened, and you have which reference that was acting as a support or resistance at the time. So the first week sell here that happened, it happened at 72.28, which was exactly the open. Now the open is not showing anymore because the market just closed, but you see the, I'm gonna get bigger here. You see the yellow letter there. Okay, so this is the open for the day. So what happened is that the market traded down during the up and after down during the A period, and during the bar, inside that bar, we traded up to the open before going down. So that was being made by a short-term trader. The next one here that we have right here at 72.08 happened at the C bar. That was a weak sell, and that was the half back at the time when it happened. Remember that it's being collected real time. So that's a very nice feature to have. You know that this week sell there, the market probably traded up in C after we traded down. The half back was around that level. I have a one tick tolerance in my setting. So probably we traded up to one tick or at exactly the half back at the time, and we started to trade it down after that. So that sell was being made by a weak trader, a short-term trader. The next one was at 78, this one here, 78.88, 71.88, sorry. It was a weak sell that happened in bar ending at 11:30, which is the E period. And the reference was a low. So if we look at, we said it happened at 71.88, which is right here. So if we go back a little bit in time, because the market went up and down, you can see that on that day here, the 28th of September, the low was exactly 71.88. So when we traded up to that level, it was a level that was probably monitored by short-term traders. We stopped there and traded down. That was another weak sell by a weak trader. After that, the next weak sell here happened at 71.75, right there, and it was the halfback at the time. So we traded down here in E, so the halfback was in the middle there. So we traded again at the halfback before going down again. So you see what here, the last one here at the bottom at 71.47, okay, it was being traded at a lows. A low could come from a previous day, or it could be a low of a previous 30-minute bar at the current market. and the low here in G was exactly at 71.47. So when we traded up to that level before going down, that was again being done by a weak trader, selling by a weak trader. So you can see that even if the market traded down with pretty good volume today, that's and the POC was moving down all day. Even though it's extremely bearish, you can see that there is an information that we have telling us that weak trader were selling mainly today. So it doesn't mean that during the day that we're going to trade up and take out all these traders. It doesn't happen this way. Market doesn't trade this way. The tempo is down all day long, so it's very difficult to change from a down flow market to an up flow market. Usually the market gets a tempo, for the whole day, and it trades down. But tomorrow, for example, if we open in that area there and we start trading up, you know that these guys they are very emotional, and we could see maybe that could trigger a short-term covering. So that's how we use the weak buys and weak sells, and that was the subject of this video today. The weak references, very important um, information that we can get from the ProSuite Gold and Market Profiler products. So thank you very much for watching this video, and happy trading.